This should never happen to veterans. I hate seeing this, and over my 23-year mortgage career, I've seen it many, many times. Today, in this video, I hope to break down to you the importance of shopping around different mortgage lenders when it comes to utilizing your VA home loan benefits. Chances are right now, if you have a VA loan, you're getting a lot of advertisements about refinancing. Maybe you could take advantage of the VA IRRRL, Streamline Refinance, or possibly the VA Cash Out Refinance. Today, I'm really going to hone in on the VA IRRRL and how important it is to shop around different lenders and how their fees can really impact the benefit of you doing a VA IRRRL refinance. I'm Peter Seroter. I'm a mortgage broker with Barrett Financial Group. I run the website lifeandloans.com, and I've been a mortgage loan originator for 23 years now. I'm also a veteran of the United States Army Reserve. So today I'm going to talk to you about the things that I consider are a high-cost refinance. These are not the technical definition of a high-cost refinance, which the government won't allow you to do. But from my career, I can tell you there's a large disparity among lenders. So what I consider as a high-cost refinance is, as a consumer, where I would look at your expenses and go, gosh, you're paying a lot to get this loan. So I'm going to look at it just like I would if I was you and say these are the things that you want to avoid in getting a VA home loan. These fees that I'm about to talk to you about here, these are junk fees. They are not required on every VA home loan. However, a lot of lenders are going to charge them. Origination fees, discount points. Sometimes they're used to buy down an interest rate. Sometimes they're used as a way to mask additional revenue. Processing fees, underwriting fees, funding fees, not the VA type, but some lenders have a funding fee that they add in as well as an administration fee. These are all revenue for a lender. They're not required for the transaction. And these fees all matter because when you're doing a refinance, the reduction in the interest rate is the benefit of doing the loan. So if you are reducing your payment by $100 a month and spending, $10,000 in fees, for example, that's not a good deal, even though you save $100 a month. The VA does have some guardrails in place that will not allow a lender to charge you an exorbitant amount of money. However, most lenders, what I found, are going to try to charge you all the way up to the limit of what that is. So I wanted to show you an example. I'm a mortgage broker. I'm going to show you a video here. I'm going to have a link on the screen that is going to give you some more information about what's different about a mortgage broker among different types of lenders that are out there. You can take a look into that. However, a synopsis is, as a mortgage broker, I'm not captive for one particular company. I can offer VA home loans through 200 different companies that I work with. And some have a niche of certain types of profiles and certain types of credit scores and down payments, things like that they like the best. This allows me to shop around and find the best for my client and their specific needs. But I wanted to show you an example of a VA IRRRL of someone with very good credit on a $350,000 loan amount, just to show you some of the disparity among the different lenders that I have. Now, lender number one, I'm showing here a 6.125% interest rate. That has no points, no discount points, and no lender fees. It does have title fees that you would typically have, but there's no lender associated fees that are going along with that rate. Lender number two has the same interest rate that they're offering at 6.125, but that has 1.711 discount points. It's over $5,500. So that's considerable for the exact same interest rate. Lender number three, they don't even offer a 6.125, but they did have a 6.625%. It had no points and no lender fees. So again, big disparity among these different lenders for the exact same client for the exact same loan. Now, what do these different interest rates mean to you as a veteran if you're going to go get a home loan at one of these different lenders? Let's say you went direct and you didn't go to a broker that could shop it around. Well, you got lucky. You got the lender number one. You got a payment of $2,126 a month, not including taxes and insurance, but that's a great payment, great rate. Lender number two, you got that same interest rate. And you go, okay, I got a good rate. Well, that one had an extra $5,500 in fees, not counting the title fees. So that payment is actually higher. It's $2,163 per month. And then lender number 3, they had a high rate there. They didn't have a lot of fees with it, but they have a 6.65% interest rate, and that payment is $2,241 a month. So you can see here we can range almost $100 a month for the exact same loan, maybe the same rate, and that'll have a different payment too because there's different fees associated with it. So these are all important to you as a veteran because the fees you pay impact the benefit of doing your VA IRRRL refinance. So me particularly, what I recommend for people to do, it's not the sexiest, but it's the most beneficial. It's a no closing cost option. If you take a slightly higher interest rate than the going rate that's available, they will come with lender credits. And if you're not a greedy lender, you can use lender credits like that. They can cover the title fees of a loan, and you can give a veteran a free or no cost refinance. So I like to do that. Yes, you could hear a lower interest rate on the news or on an advertisement, but always those have tons of fees associated with them. Let me show you an example here. Lender number 1 that had the great option available to you. If you did a 6.375 with them instead of 6.125, that comes with a lender credit of $1,500. In a lot of states like Arizona, that will cover all the fees of doing the loan. So that payment is $2,174, which is $47 a month more than it was for the loan if you had the fees associated with it. If you live in a state that's more expensive, some states like Florida or whatever, they have more taxes or fees associated with them for the title, you might need a larger lender credit. So you jump up a little higher in the interest rate, for example, at 6.49%, and you get a $2,190 payment on that with that $3,000 lender credit. So it's a $64 a month difference. So yes, the payment's going up, but you're adding $3,000 into your loan amount. Next slide here, I'll tell you a little bit more about what that means to you. And then lender number 3, they did have a no closing cost option. Lender number 2 did not even have one available. Lender number 3 did. You bump all the way up to 7.125%. That gave a $2,000 credit and bumped the payment by $103 a month, but it eliminated $2,000 of fees. So you go, well, why would I do that? Why wouldn't I just go for the lower monthly payment? Well, that's what the lenders hope that you will do. You'll just think that and go, well, I want the lower payment. It's $47 less. It's $50, $60 less, $100 less. You go, oh, that's better for me. But if you don't stay in the loan long enough, you're not going to recoup what you spent to get that lower payment and lower rate. So for example, with a VA IRRRL, you have to wait 210 days from your last refinance and when you made your first payment on the new loan in order to be able to do a new VA IRRRL. Most lenders know you're going to turn around and do it again in 7 months. So that doesn't impact them in offering this to you. They're still going to offer the loan that has multiple points, sexiest interest rate. However, you're going to pay thousands and thousands of dollars of fees getting added into your loan, and you do it again in 7 or 8 months. That eliminates your ability to recoup what you spent to get the interest rate. So for example, on the option I was explaining here with no closing costs, it's a 31-month difference to recoup the $1,500 of fees at $47 a month. So unless you're there for 32 months, you never even make your money back. So why would you not do the free option continually? Same thing with the higher lender credit. It's a 46-month recoupment. So that's a long time to recoup paying the extra fees. So, really and truly, lenders know that you are going to refinance again, but we make money based on the size of your loan. So the more you add in fees, the more money we make. So don't do that. Adding in all those fees really benefits the lender more than it benefits you. Going the cheaper route, having no fees added into your loan will always benefit you. You cannot go wrong if you get a lower interest rate and you pay nothing to get it. If nothing gets added into your loan, there's no recoupment. You'll always benefit. So what I do with my clients is I'll continually refinance when the VA allows with nothing added into their loan. And every single time it's a lower rate and a lot of benefit, and we can just keep doing it, and it doesn't hurt them in any way, shape, or form. Benefits us both. I'm helping them, they're helping me. So something to think about. Now, when you are paying a bunch of fees, you're paying 2 points to get the loan, plus all the processing, underwriting, $10,000, $12,000, $15,000. I'm not exaggerating. This is what lenders will charge a lot for these VA loans. You're not going to make your money back on these. So you want to watch out for the junk fees, the discount points, the origination fees, the processing fees, the administration fees, the underwriting fees. All of those are going to impact your ability to recoup the benefit of doing your VA IRRRL. So here's some tips to avoid this happening to you. First, seek multiple lenders. You got to check around. Don't take the first lender that you talk to. Don't take the first lender, especially the one that advertised to you. Find some other options. Check around. A referral is great. If you're seeing that you're getting charged a lot of money to do a loan, do the math on that. How long are you going to live in the home? Does it really make sense to add $20,000 in fees into your loan? Are you a veteran that refinances often? If you are, do you think it makes sense to add $20,000 to your loan every single time you do it? I think you need to find a different option. Do the math on that. I've seen veterans lose hundreds of thousands of dollars just refinancing by lenders taking advantage of them. Ask questions. Find out why they want you to pay the fees. Why do you have to pay the points? You need some good answers to these, other than the fact that it makes them more money. The higher the fees are on your disclosures, the more questions that you should have. These loans sometimes can have high costs. A veteran that has a funding fee that's doing a cash out refinance or a purchase, that fee added in is a very, very high one. But when you add all these other things like points into there and all the other junk fees, you could have a $25,000, $30,000 loan as far as cost. So something you really got to look out for, and you don't want to make any rash decisions. If you don't feel certain about something or something rubs you the wrong way, call the VA. They're actually pretty helpful. So give them a call and they can tell you if something's okay or not okay, or if you should be concerned. And then the last and final best option is to call me. Go on my website, lifeandloans.com. You can get in touch with me there. I will tell you whether you work with me or not. I will tell you if you are getting a fair deal. I can tell you in any state. You just let me know what that lender's offering you for your VA loan, and I'll tell you if it's a fair deal. If it is, awesome. If it's not, awesome. Don't have to work with me. Check around with a local broker, whatever you want to do. But I don't like seeing veterans ripped off, and I can tell you it's happening every single day. So as we are entering the season of VA IRRRLs, we haven't had them in a couple years now, but we're entering the season of IRRRLs coming back. I want you to be looking out for this. As a veteran, and you're thinking about refinancing and doing a VA IRRRL, get in touch with me. I'd love to help you. If you got some value out of this video, please give me a like and subscribe. Hope to be providing more value into your life every day.